Good morning, everyone. This is Daily Trading Analysis with the weekly recap for the first weekly recap of 2025. Happy New Year. I've been getting a little bit of rest this start of the year. I had a pretty good 2024 and I've been spending a lot of time with the family, with friends, and now it's time to go back to my favorite work, favorite job, that is doing videos for you. So welcome back to the first weekly recap of 2025. And I've been going to, I'm going to do a little bit of improvements to this channel. This is the first one. This is my first dashboard of weekly recap, and I'm going to do a little bit more improvements for the videos, for the content of the channel. So stay tuned. And if you want to be with me this 2025, you are all welcome. Subscribe, like the channel, and let's go to the video and start this new weekly recap format. If you have any other comments, you comment down below, and let's go with the weekly recap on the economic data. On the first hand, I've been closely monitoring the US market, and frankly, it's starting the year a little bit with a lot of mixed signals right now. We are seeing a tug of war between positive economic indicators and persistent concern. And this uncertainty is creating a lot of volatile price action. It's a very volatile environment. And I think it's crucial to understand both sides of the story at the start of the year. And for the positive economic indicators, we have the ISM manufacturing PMI and manufacturing new orders. We have a lot of them going to the upside. As you can see here, we have the actual values going up in comparison with the previous values. And these two are positive. As you can see here, these are positive values. But remember that there's potential inflationary pressures. So we have these prices paid, which are increasing from 50 to 52, which signals exactly this, inflationary pressures. And this, coupled with the fact that the Federal Reserve stance is getting more hawkish, Fed sparking said a couple of comments on Friday, which we have to pay a lot of attention to. Key points. He thinks that inflation is consistently at 2%, and there's a significant weakening in demand before considering rate cuts. So we need to see really progress on the inflation side for him and for I think it's the overall stance of the Federal Reserve members, that they are not confident on controlling right now the inflation. More comments, it's that large and growing US debt is putting pressure on long rates, and he's in the camp of staying restrictive for longer due to potential for inflation to rise. So this kind of numbers right here, we signal a lot of inflationary pressure are really negative right now. So even though we have an improvement, that improvement significance is negative. More things that I would like to cover is the initial jobless claims and continued jobless claims. We had a pretty noticeable downside from the previous value to the actual value. And this is positive. Why? Because we have a strong labor market. And finally, more on the home sales and on the home prices. These are good for the sector, and I think it indicates strength in the housing market, which I think is going to positively impact the economy. The same for the Dallas Fed Manufacturing Business Index is positive and expected regional economic strength. And overall, even though we had two negative significance data, I think most of the data for the week has been good. And if you see for the overall sentiment in here, we have a natural rate. We started the week with a lot of bearish and slightly bearish signals, but right now we are in the middle. And what happens when we have potential good data coupled with neutral price action? What happens is that big investors and big money that starts the year fresh, they tend to buy dip. And if we check the price action for that, we can see that overall, this is the daily chart on the Nasdaq. Overall, we've been since mid-December, we've been getting these kind of dips. And the end of the year on 2024, we got two big pullbacks. We have a clear trend right now, but this is in a framework in the context of being basically a good deep opportunity that is not invalidating any long trend and strength for the index. I've been waiting for a key moment. A big key moment is going to be here at 20,600s. But right now, after the end of the year that we got a big red days, we go to the 1 hour. We've been getting these kind of flashes. On Friday, after all these price action that got really undervalued, we took sell side liquidity right here. I was waiting exactly for that. We go to the 1 minute. After taking that on Thursday, look at the price action down here. Look at this price action. This was the Tesla dip. And then we started Friday overnight, the overnight on Friday, holding this. So I was really waiting for the open to do some kind of manipulation move. This was the low of day. I tried to go here, but there was no setup here. There was no good setup for me. I was tending to do this, but I was really waiting for a big manipulation. And I was thinking here, okay, I lost the move here. Well, it's dipping a little bit. And then when I saw the price action taking sell side and having this is my setup, you know that this is the inverse. This is a bullish verbally gap. This is a big candle. And I took the next one with the stop down here. That was, we check, that was 40 points of risk. In 2024, if you remember the end of the year, I was trying to be super specific on my setups. I'm only going to take A+ setups, even though they extend my usual 20 to 15 points risk. If they are good quality and they meet my criteria, I'm going to take them. In this case, I have accepted more risk than usual for a big risk reward ratio. 1 to 5 is a big reward ratio, and I took it, and I was quite confident here that perhaps we were going to do some kind of turtle soup here, another manipulation move, but I think this was a good stop loss. So when I was seeing that the price action was here on the buy side taking and it continuously grind, I was quite confident. I put my stop loss at break even and I just waited, waited. Look at this grind. Where's my target? Remember the 15-minute narrative? Low hanging fruit. I was watching this level and also the final target. This was quite great because it was really on the 1 hour inverse fair value gap and consequent encroachment. So this was really greedy, but I was also watching, let me just it for you, these pre-market highs that got tapped one time and we got a little bit of dip and they bought up that also. So I was trailing my stop not aggressively. So when we hit this, I put my stop loss right here. And for this amount of points, I was just risking this amount of points. So almost 1-to-1 risk reward ratio. And this was the level of 21,500. Pretty psychological. So it got bought up 2 times. 1 time, 2 times at the 500s. And then we got the buy side. I sold my only contract for almost 200 points, almost 4,000 in one trade. And this is the first trade of 2025. It was for me a really patient trade, waiting the entire week for a good setup to buy the dip and go with the flow in a trend with a manipulation move and a fair value gap combined setup. So after this trade, I really just close it and shut it down and enjoy my weekend. Now, what is next for us? Let's try to bring some light to the setup. I'm really waiting for this sell side or even this sell side to be taken. So I think longs are still against the trend because we have right now kind of pullback. We have established lower high and we have some kind of trend going on. So I don't think next week safe for longs. And on the 1 hour, we have some kind of 1 hour encroachment. Going to see how it reacts to this. And then we have another one. We are really against the trend, trying to buy the dip. And I think we have not yet go, we have not gone too much deep to really think longs are still viable. So basically, this is a really dangerous liquidity pool, all these. And honestly, I wouldn't be surprised if we take these two at 18,000. That's too much, but I think right now I'm going to be patient and still see how it reacts to key levels. I prefer to lose some trades than buy a, a volatile pullback. What I mean for that is that look at these two pullbacks, they're quite deep. So I wouldn't be surprised if we also try to go higher and in this kind of rejection, we continue the trend looking for more sell side liquidity and more accumulation for big players. So this is my expectation. So on Monday, I have a holiday, a local holiday. So I'm not going to be on, but for the 7th onwards, really, I really recommend to be on the patient, super patient side. We need to see how this big money players build their portfolios on the start of the new year. We have to also think about other convergences. We have a strong dollar, and this is going against the Nasdaq. We have a good setup for the financials, but if we check the RSP, we can really see the pullback. We can really see how it weakened the end of 2024, and we are just consolidating. I would like to really see some kind of higher on the RSP, really see how they behave on the overall trend. But dollar is against us. We are seeing yields holding. Inflation is not under control. And we have other assets that are pushing higher. We have copper that is weakening. This signals not a lot of strength on the global economy, but we have the gold not yet being published for the new year. So we need to really be patient and let's see what happens. I prefer to spend some days or even weeks really analyzing how things are going to be in this kind of grind higher and wait for the good movement. That move in which you think, okay, this is a very good manipulation move. I'm going to buy this. That's my best setup. That's the setup that I took on Friday. And that's all from my side. As always, thank you for your time. If you found these weekly recaps useful, remember that I'm doing them every Saturday for the weekly recaps and from Monday through Friday, mostly daily videos for daily forecast, market updates, and market recaps. Remember that we have just started 2025. We need to be patient to see how it starts because 2024 ended with a very sad note and it was expected, but I'm certainly confident that a lot of people got caught on the rally on the end of 2024 trying to buy those deals. And I don't want to be caught on that 25. So really, patience, discipline, risk management are your key for your success, even more for 20. Have a good weekend, rest, try to disconnect, do your homework, and stay tuned to this channel because I'm going to bring a lot of new improvements 2025. So stay safe and see you on Tuesday.